Morning, traders. It is 8:02 a.m. Chicago time on Monday, the 11th of October, 2021. It is 8:02 a.m. Chicago time. This is episode number 2091. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing a risk-off sentiment as the market sold off a little bit in the overnight session across the board in the indices. You could see that the S&P has recovered, but still down about 16 basis points. The NASDAQ is down 65 points or 44 basis points. The European markets are also off. The big centerpiece, well, a couple things today. We have a U.S. bank holiday. I'm losing my voice. 1 second. Sorry about that. U.S. bank holidays. The U.S. bank holiday today for the Indigenous People Day. The futures are trading, so the treasuries on the CBOT and in the futures markets are trading, but broker tech and cash trade desks at institutions are closed this morning. So we're seeing, given the move in treasuries here overnight, which was relatively decent, we have a pretty muted response in the equity sector. So that's a big issue. Energy prices continue higher. Both gas and natural gas and crude are climbing. Continuing to climb. Crude oil pushed a high of around $82 and a quarter. This has been quite a run for crude, and a major concern, of course, as this increases input prices, it increases transportation prices, and overall contributes to inflation, and it increases the cost of living for consumers, therefore creating a smaller amount of discretionary spending. So this has a negative impact on the indices and on earnings potentially. We're seeing higher yields because of the Treasury market falling, Treasury futures falling. And then we have a bunch of key releases this week. As we come in here, we're looking at several items for the week. Tomorrow, Great Britain has the claimant count change, a major number at 2 a.m. Eastern. The German zoo economic sentiment, another key figure at 5 a.m. Eastern. We have the U.S. JOLTS job openings. This is about the number of open jobs in the U.S. That's at 10 a.m. tomorrow. And then we get China's exports year on year. At 11 p.m., we also get the China imports. That's all tomorrow. And then on Wednesday, we get balanced trade out of Great Britain. And then we get core inflation and the inflation rate on Wednesday at 8:30 Eastern. That same day, we get FOMC minutes at 2 p.m., and then we get the inflation rate out of China at 9:30 p.m. that evening on Wednesday. Friday, not much Thursday. Friday, we have retail sales in the U.S. for September. That comes out at 8:30 a.m. And then we have Michigan sentiment prelim, which is the market mover, at 10 a.m. So this is what's on deck for the week. We're looking at a very light calendar today. Again, it's a holiday. The European zone, the Eurozone has got ECB Elderson speech at 10:45, and in Great Britain, BRC retail sales monitor at 7:01. These both are the only calendar events that I post are 2-star or second to top tier releases. In terms of the S&P, we're looking at 200 226,000 contracts in what is a balanced profile. 98% of the inventory in the S&P overnight short. The range is pretty decent at 35.75, well above the mode of 23 points, but within the first standard deviation of 37 points. The high overnight's 43.88. The point of control is at 43.70, and the low is at 43.52 and a quarter. And that's where we stand today. Bitcoin has pushed and pushed and pushed, is on its way to $60,000. Ether at 3,600. And that's where everything stands. I'm not doing a review of Friday in terms of the plan. The plan, there was really no movement on Friday. Here's what we had on Friday. Friday's trade opened in the lower distribution of Thursday after the non-farm payroll release. We held below the key low volume node here at 44.09 or so, and we tested it overnight. We approached it overnight, and then we opened below and just made no attempt to try to take that out. And to me, Friday was just a complete blah trade. There was nothing there. I actually took the once the market opened, I took the day off on Friday. Just needed a mental health day or whatever, a break. So we went sideways, and then we went sideways, and then we breached the IB down here. Actually, we breached it. Was it right? No, we breached the IB down here. And then we went right back to the middle, and we ended up with a completely balanced non-trend day. It did meet the IB stat. It did meet the overnight stat, but overall, it just consolidated. The key thing to remember is that we have a high volume node, and you can see it on the profile here. We have a neckline and a high volume node between 44.0650, 44.07, down into 43.75, and we are right at that 43.75. We've pushed the low to 43.52. So overnight we went and tested that 43.52, this level that just won't go away. We tested it from the top. We've come back about 20 points, 24 points, back to 43.75. We're opening in this neckline. We have a gap above us. We have a gap below us. And so the market is in a tipping condition, so to speak. And that's where we stand this morning. Looking at what has happened overnight, we tested higher very early on, right at the open, but it's been sellers since. The market's been heavy pretty much the entire overnight session. Every time it has attempted to push and hold the settlement price of 43.82 and a quarter from Friday, it has been sold. It looks pretty weak, and we are holding right here in the gap mid. The gap comes to us from Thursday. So this is where we stand here. This looks kind of weak to me. It's despite the bounce that we had on Friday, and Friday had a point of control at 43.9275, and we're not able to hold and or breach it. It's up here. It's way up here above the range. So we do have a higher low on this retest on the overnight session, but overall this is likely to be a pretty choppy morning. So we're opening in a slight gap. If we hold this 43.75, we just tested the prior session low, which was 43.76 and a quarter. We just tested that from below, and we're pulling back, and we may end up with a small gap down, and it's really hard to tell from here which way we're going to want to go. So what we have here is a bit of a triangle formation, and today is a good day to sit on your hands and wait for the break. Okay, so that's the main thing to take away from this morning. There is a slight higher a slight positive delta. Looking at what we've done so far, so let's get rid of this trend line, which has been obliterated. We can see that there's a very clear, somewhat of a channel here. It's a kind of a descending wedge type of thing. And we do have this gap below us. We have the gap above us. And last week we gapped up and we're trying to hold on to these higher prices. But I'm going to tell you what, the buyers are not doing a great job maintaining prices. We were not able to push through to the 43, 45 area, this high volume node area right here. We're not able to get there. And the push that we had on Thursday to 2150 ended up being refuted into the session later. So on Thursday, we gapped up. We pushed really well. It was a trend day up until the last hour. And then we turned around and we sold off pretty strong to finish right where we opened. And then Friday, we had the non-farm payrolls. We opened and we were not able to maintain these higher prices around the 4,400, and we ended up selling off. And here we are finding ourselves below. So despite the fact that we broke the one-time framing down earlier last week, the middle of the week last week with the gap up, we've reestablished one-time framing down on the daily on Friday. So to me, I'm favoring a return to 43.50 today, and I'm favoring rediscovery and re-exploration of this lower range into 42.80, which was the point of control of last week. That's the bigger picture view. So that's where we stand this morning. Looking at the overview, here's the kind of the big picture overview on Edge Pro X. We are really across the board. We're seeing the market kind of holding above, the indices holding above their monthly VWAP so far. There it is in the ES. The NQ is relatively weaker and has been. The NQ has been selling relatively more than its peers. The energies, of course, just a nice continuing to be parabolic, moving away from the monthly VWAP. Gold has been sitting sideways, although gold saw a pretty decent pop on Friday on that non-farm payrolls release, but it has again resumed its flat line against its VWAP. Same with silver. Silver saw a pop on Friday, but by the end of the day, it basically came back and it was reverting back to the VWAP. The bonds, as I said, are looking a lot weaker, continuing to trend away to the downside, and that is higher yield pressure on the entire market. So I think my conclusion on this is that any attempts to push higher are likely to be sold as long as these treasury futures continue to be weak. So, overall, the S&P is not able to get above the 4,400 and hold, and that makes sense given the kind of signaling that the Treasury market is providing. The euro remains weak. It keeps testing its VWAP, monthly VWAP from below. The cable has actually reversed. If you look at the September cable, it went parabolic. It sold off parabolically away from the VWAP, monthly VWAP, and then has been surfing it from the top side. The cable's looking relatively stronger since the beginning of the month. The Swiss has maintained its strength since the beginning of the month, and the yen continues to parabolically move away from the VWAP as well. Yen is a liquidity provider in terms of as far as the currency market goes. Let's take a look at what's expected for today. Remember, today is a U.S. bank holiday, and so the action is expected to be muted. Oh, one thing. On Thursday at 4:30 p.m. this Thursday, I'll be speaking about selecting your data. I'm going to talk about the types of data feeds that are out there in the futures market, how they are different, what a charting data feed is, and how it's different than an execution feed, how a fixed API feed, and so on and so forth. And we'll be discussing that. This is a question that we get a lot, and so I'm doing a talk, shouldn't be more than 45 minutes, about selecting a proper data feed for your time frame and for the type of trading that you're doing. You can register. The link to register is in the description of the YouTube file, of the YouTube invitation. And also it is pinned to the live chat. If you click on the blue ribbon at the top, this link, edgeClear.com/selecting-data-provider, will be right there. And let's take a look at what's expected for today here. So what are we looking at? We're looking at a market that has tested down, pushed back up to settlement, put in a higher low. So this is the pattern: open, test down, push back to settlement, higher low, and now we're here. So this is a bit of a W formation. This is generally bullish as a formation. However, the context of this W is that it is below Friday's balance. Friday was, the market reached absolute equilibrium, didn't want to move away, but it's still weakish. So to me, I'm expecting false breakouts to the upside. I'm expecting better tracking or easier facilitation of the auction to the downside. The expectation this morning is an open auction against either out of range or against the low. I'm expecting it to be responsive, push up. Remember, the overnight inventory is about 93% short or 95% short. Expecting it to push higher into the overnight high, potentially tag the prior point of control, which is against the 91.75 MC point of control. I'm expecting resistance here at the 91. Okay, and remember the point of control on Friday is 92.75. So 91.92 is expected to present resistance here, and then I expect it to move back to the open, tag the overnight point of control for that 76% historical probability, and hold sideways. I'm expecting a lower low, lower high against today's session. So I'm looking for a lower low, lower high. I'm expecting the auction to continue to one time frame to the short side. It's that's the primary scenario, the most likely scenario. The secondary is a push immediately to the overnight point of control, chop, 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 chop. A potential push into 65 or so. 65 has been key for quite some time. And then it starts to base, and we're looking for a drift back up to 91.92, and then ultimately a push back to 4,400 or the double O up here, a push back to the 4,400 before it closes. My expectations for today are quite low in terms of range and activity. Not only is it the Monday after non-farm payroll, which is historically a choppy day. I've been wrong. Lately, Mondays have been pretty busy, but we also have a holiday to boot. So a lot of the institutional desks are closed today, and so temper your expectations, but the key numbers are down here: 65, above is 91.92, and double O. This is what I'm looking for today. Good luck, and I'll catch you tomorrow morning.